Thank you for watching. Please enjoy the video.
Luna Classic Introduction. I'm excited to announce that Luna Classic has hit the exchanges. Founded by Terra and its community, Luna Classic is a stablecoin on Terra's blockchain, which can be used as a means of storing value. Luna Classic, a stablecoin on Terra's blockchain, has hit the exchanges. A stablecoin is a cryptocurrency that has a fixed price. The most famous example of this is Tether, which was released on the Bitcoin blockchain in 2014 and trades at around $1 USD regardless of the value of Bitcoin itself. Tether has been criticized for its lack of transparency, with many believing that it doesn't hold enough fiat currency reserves to back all USDT tokens issued. A new stablecoin on the Ethereum blockchain called Luna Classic has just hit exchanges, offering an alternative to Tether's dominance in this market segment. What is Luna Classic? Luna Classic is a decentralized cryptocurrency developed by Terra, which describes itself as a cross between a public company and an open source project. It uses a proof-of-stake algorithm called Terra Mining for distributing rewards among miners rather than using mining hardware or electricity costs as with other cryptocurrencies like Bitcoin or Ethereum Classic. This means you can mine for coins without having expensive equipment like GPUs. All you need is some Ethers in your MetaMask wallet. What is Luna? It's a coin that is supposed to preserve its price, and it does this by slowly changing its value as the market moves around it. Luna is a cryptocurrency that was created as a fork of Terra Luna Classic in Altspace. It is a stablecoin or a form of cryptocurrency designed to maintain its value over time. The goal of stablecoins is to provide investors with an alternative asset that can act as currency on the blockchain but does not fluctuate wildly in price. Like its parent coin, Luna will have a total supply of 2 billion coins at launch and will be distributed through mining. Unlike LTC, however, Luna will also implement a unique minting, burning mechanism in order to maintain price stability while maintaining its deflationary nature. How does this work? Each day some random stakeholder receives a fee from the reserve. This fee is proportional to their stake and inversely proportional to their vote power in Luna Classic's price adjustment parameter. While you might think that a stablecoin is just a coin with a fixed price, it's actually more than that. A stablecoin has three components: an available supply of coins, a total supply of coins, a price adjustment parameter. The supply is how many coins are in existence at any given time. The total supply is how many coins will ever exist, and the parameter is a way for people to adjust the price of their coin. If the price of Luna goes down, then this fee will increase. Conversely, if the price goes up too much, then the fee will decrease. The fee is proportional to your stake. For example, if you have 100 LUN, then your fee will be 0.001 LUN per day. The fee is inversely proportional to your vote power. This means that if you have a lot of tokens, then your vote will count for less, and so the cost will be less than someone with fewer tokens. For example, if you have 1,000 LUN and someone else has 10 LUN, but they also have 1% more voting power than you do, then their daily transaction fees will be 0.01 ETH, while yours would be 0.1 ETH. But remember, this only applies when voting for parameters like inflation rate or supply curve slope, not things like changing a parameter name or removing an option entirely. Each stakeholder has different fees depending on whether they are opening something new or closing something old. Closing something means that all current contracts using that account must also get closed before being able to open again, whereas opening means creating new accounts without any prior history on them whatsoever except what might exist inside existing wallets. Contracts owned by other users who happen to share one address between multiple wallets. Contracts created under different names, etc. If you want to vote for a delegate, then you need to have at least one account with EOS tokens in it. If you don't have any yet, then check out my previous post on how to get started. Once you have some EOS tokens in your wallet, then go ahead and buy some more from an exchange like Binance or KuCoin if needed. You can adjust your vote power by staking or unstaking, or by voting for different parameters. Vote power determines how quickly you are compensated for the price variations of Luna. You can adjust your vote power by staking or unstaking, or by voting for different parameters. Vote power determines how quickly you are compensated for the price variations of Luna. You may earn a return on your investment through voting in two ways. The first is that if a parameter is voted to be changed, then you will receive compensation based on the amount of Luna that you have at that time. So if all parameters remain unchanged, then there's no way we can pay out to investors until something changes. But if we change one parameter and an investor has enough votes, then they'll receive compensation immediately after their vote is executed. The second way investors get paid when things go down is through voting itself. Every time someone votes on any action within the network, then they'll receive 5% more than what they originally had back from their stake, CDP position. This means that as long as you don't miss any opportunities for making money, then everything should work out well. It also ensures there's always something going on within the network so everyone can keep busy doing stuff even though nothing seems important yet. So what can I do with Luna? Basically, you can use it as a means of storing value. You can use it as a means of storing value in combination with a collateralized debt position or CDP. You can use it to pay for transactions on the Terra network. You can use it for staking, which will earn you rewards. You can use it to vote on different parameters of the network. You can use it to buy other things. There is still so much more about Terra that has not been released yet, but I'm not sure if you know what the Terra network is. The Terra network is a decentralized platform for tokenizing assets and creating smart contracts using the Tendermint consensus algorithm and the Cosmos SDK with support for multiple blockchains built into its protocol. The team has been working hard to build a stable and secure network that can also scale efficiently as it grows more popular, and it seems like they have succeeded. The fact that this project was originally funded by Consensus means that they have received investment from some of the biggest players in blockchain technology, which could mean big things for their future success. Price 12 cents. The price of Luna Classic is 12 cents. The exchange rate for Luna Classic is 1 Luna Classic equals 0.000000181 BTC, 1 Luna Classic equals 51.65 XMR, and 1 Luna Classic equals 0 ETH. The most recent new block was mined on 2019/7/14 4 hours, 33 minutes, and 8 seconds UTC. The total supply is 2,000 LUN fixed coins with no inflation at all after that point. There are currently 621 active nodes in the network, with a new one coming online every 4 minutes on average. The Tendermint consensus algorithm is a Byzantine fault-tolerant consensus protocol that allows for efficient and scalable operations on the network. It's basically an improved version of proof-of-work systems like Bitcoin, which can only handle about 7 transactions per second. The Luna Classic project is an open-source, peer-to-peer cryptocurrency that enables instant payments to anyone in the world and allows for the secure storage of funds. Luna Classic uses a proof-of-stake consensus mechanism for transaction validation. Market cap $1,077,827,368. Market cap $1,077,827,368. Market capitalization or market cap is the total value of a company's outstanding shares. It is calculated by multiplying the current stock price by the number of shares outstanding. For example, if a company has 10 million shares and its stock price is $10 per share, then its market capitalization would be $100 million. The number of outstanding shares is shown in the company's quarterly or annual financial statements. 24H volume, $2,524,854. The 24H volume of a cryptocurrency is the sum of all its trades within the last 24 hours. This can be an important indicator of how much activity there is in a cryptocurrency and potentially how liquid it is. The 24H volume of a cryptocurrency can be an important indicator of how liquid it is. Liquidity refers to the ability to quickly and easily convert an asset into cash or another form of payment, such as buying or selling a cryptocurrency. A high 24H volume indicates that there are many buyers and sellers in the marketplace, which should make it easier for you to find someone willing to trade with you at any time. Available supply 8,796,587. Luna Classic is a cryptocurrency that offers a unique value proposition, namely the implementation of an asset-backed model with collateralized reserves. Available supply 8,796,587. Circulating supply 6,898,458. Reserved for the dev team 1%. Staked by nodes 1%. Holded by users 2%. Total supply 1 billion. The total supply of Luna is 1 billion. This means that there will never be more created than this, and it's the same as the total supply for Bitcoin. The number of Luna in circulation cannot go below 1 billion, nor can it go above 1 billion. This means that there will always be enough Luna for everyone to buy as much as they want at any given time. Percent of total market cap, 86.94%. The market cap is the total value of all coins that have been mined. It's calculated by multiplying the current price of each coin by its circulating supply. The larger a coin's market cap is, the more popular it's become in terms of its investment potential. The Luna Classic network currently has a total market cap value of $41,849,493 USD with 1 million LSTR tokens available on exchanges for trading. This puts it at 86% compared to other coins such as Ethereum, which has an approximate total market cap value of $54 billion USD or 139 times greater than what Luna Classic has. The pros and cons associated with this large gap between currencies are unclear since there are many factors that determine how much value one cryptocurrency can have over another. However, when comparing them against each other, only one thing matters: growth potential. In this case, we see that ETH has grown from just less than $0 when first started up until today, where there could potentially be billions on tomorrow morning. That being said, we aren't saying Luna Classic doesn't have any growth potential because anyone could invest into it now before seeing any major gains later down the road. Terra Classic will be a fork of Terra Luna. Terra Classic will be a fork of Terra Luna. It will function like a separate blockchain but share the same history, so you can send tokens or ETH to the original address and it will arrive in a new fork as well. Conclusion. I hope you enjoyed this little introduction to Luna Classic. I know it's not easy to keep track of all the different coins out there, but I think it's important for us all to understand why certain coins exist and how they might be used in the future.